Hello students. Security analysis and portfolio management. So in this subject, let us understand about the differences between investor and speculator. So who is an investor? Before that, let us understand what is this investment. It is nothing but the employability of funds which has some monetary value. Okay, why you are just employing your funds on assets? To increase your capital. That is what capital appreciation. Okay, you are just putting your funds on any assets. The reason for doing that is what? To get back in the form of return. Okay, that is what capital appreciation. Okay, so speculator. So speculator, it is also, he is also a person where he invests on some assets, but the major difference is like, speculator, he based on the price fluctuations. So for getting, short-term gain, right, he'll take high risk. Let us discuss all the differences one by one. So first, so planning horizon. So what plan that his investor will do? Usually investors have longer investment horizon which leads for to few years. Investors generally opt for long-term investment. Yes, this is what I said, like starting from 1 year to whatever, till 10 years or 15, whatever. Okay, so it starts from 1 year. That is what long-term investment. He plans for for a long period of time. But speculator in the sense like where he aims for few days or few months. Okay, so probably he may buy a stock for a particular period. Say for example, he buy a stock on Monday. Immediately on Tuesday, based on the price fluctuations, he may be sells his stock on the Tuesday. That is called as, that person is actually called a speculator. Okay, next, risk. Risk in the sense, investor is, normally is willing to assume a reasonable and moderate level of risk. Why? Because is investor definitely taking up a high risk. He'll not into that scenario. He'll not put himself into that scenario. Okay, so probably he may take some reasonable or moderate level of risk. So that is more than enough for investor. But when it comes to speculator, either by knowingly or unknowingly, he'll take very high level of risk. Such a huge risk that he takes. Okay, sometimes he may get profit. Sometimes he's also ready to lose the basic capital, whatever. So risk contains both the different situations, right? Next, return expectation. Investor usually he seeks a reasonable rate of return at limited risk offered by the asset classes. Yes, again the same point. Okay, so like his return is also in a reasonable way by taking limited risk. Okay, that is what return expectation. He may not expect for high return, such a high return he not expects. He never expects. Okay, when it comes to speculator, why? Because he is taking such a huge risk for very high return. Okay, very high risk for very high return. That is what speculators mindset. Clear? Next, basis of decisions. His decisions is usually based on the investor's decision on the fundamental aspects and evaluates the future. Okay, so based on the companies, okay, what is going to happen, some basic level of attributes, like he may think about the company and he takes his decision. But when it comes to speculator, so he just overview all the technical charts, news, sentiments, whatever that he is what hearing from the outsiders. Okay, he just taking into his heart and he takes major decision accordingly to that. When it comes to leverages, again. So leverages is what the tool, it is what a support any individual he just use and he'll be applying for his business. So investors, he'll use only his own funds. He never borrow any funds from outsiders. Okay, that is why we say that this is don't create leverages positions. Okay, and here speculators, so where else he invest only borrowed funds. Okay, so in investor leverage is not there, where else that is unlevered form, we say that as unlevered form. The opposite way, like speculator, we say this as levered form. Why? Because it's borrowed funds. Okay, so these are all the major differences between speculator and investor. Thank you all.